Hi everyone, and welcome back to today's Morning Report chart appraisals with me, Richard Perry, market analyst at Tech Markets on Thursday the 31st of July. Going to move on to dollar yen now, and what a move we saw yesterday on dollar yen. That was the biggest one-day move since March 2014, which is the 19th of March. Biggest one-day move. Wow, that has now taken us up towards the top, and we're trading through the top now of this trading band, this that we've broadly been in for the last 3 months, you would argue. 3, 4 months, in fact, between sort of 101 up towards 102.80. But you're now trading above that as 102.80 mark. Breached on the upside to 103.08 yesterday. That was the reaction high. I'll show you on this chart here, and the reason behind it. We were fairly sedate, sort of just drifting higher, and then bang, the GDP data that we saw from the States out yesterday that was so positive for the dollar, had a significant move on the dollar yen, just burst through all this resistance and up towards and above the 102.80 level, which has been sort of used as the peak. And throughout the course of this chart, 102.80 has been a historic pivot level. That's 102.80 there, round about there. Anyway, 102.80 has been a historic level where peaks and troughs have formed. So that's an interesting move, that we're now strongly back above that and looking to push higher still. So that suggests no real appetite to stop buying dollar yen as yet. I thought there was the possibility early on that this consolidation could start to drift lower, but it certainly seems that as the European traders have come in, they've bought dollar yen once again, and even in the last few minutes it's starting to push higher. But there is the prospect, after such a strong move higher, certainly there is always the prospect of a retracement, and this move sort of went almost exponential yesterday. And quite often, when you see the strong moves to the upside then start to lose a bit of momentum, you'll get a drift lower again. Not yet seen, and as I said, the European traders have come in and bought it. But you look at this RSI up at 70 again, and that's a level not seen since December, since actually the 1st of January was the last time we saw the RSI above 70. So that's the highest level we've seen it this year, and that is despite these spikes higher that we'd seen throughout February and March. And does sort of lead me to suggest that perhaps upside potential is limited, although at the moment the bulls are supporting it. However, you would certainly argue that the prospect after such a strong move yesterday, and also with the RSI at such an extreme level, that there is the prospect of a correction that could become quite soon. And where would you come back to? Well, you'd certainly be looking at this 102.30 level, which is the initial real support that comes in. But yeah, it's a very strong move that's having a pretty profound impact on this chart. All these moving averages are now starting to turn up. Even this 144-day moving average, which has been in decline for 6 weeks now, is beginning to shallow as well. So rather a significant impact that this move has had on the chart, and it will be interesting to see if it can continue to push on higher and just continue up towards this 104 mark, 104.10.11 that we saw at the beginning of April. So we shall see what happens, but certainly the weekly jobless claims number could have an impact today, but I think it's possible that this chart might settle down with non-farm payrolls also due tomorrow. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.